Okay, so this is probably the 15th time I've tried to record this intro because I'm struggling trying to find the words that properly convey how important what I'm about to show you is. So I'm just going to flat out say it. What I'm going to teach you right now is absolutely foundational to understanding the market, to understanding why people do what they do in the market. And ultimately, this understanding, what I'm going to share with you right now, is really the base of how you're going to find your edge in trading. Whether you're using our software or you're just following our methodology on raw charts, you need to understand what I'm about to tell you. So pay close attention to this video, watch it as many times as you need to, grasp these concepts. Let's get into it. Okay, so in this lesson, what are you going to learn? You're going to learn the single most important ingredient that's missing from most every trading strategy. Regardless of what strategy someone's using, if they don't understand what I'm about to teach you, they are missing a huge piece of the puzzle and they're going to put themselves at a huge disadvantage. Okay? So you're going to learn that. You're going to learn the natural reason most people fail at trading. And yes, I said natural. You're going to find that losing is natural. And you have to understand how to unwind this natural tendency, okay? You're going to learn how to use this information to give yourself an edge in the market and protect yourself from destructive trading behavior. If you've been trading for any length of time, you know something about destructive trading behavior. We're going to teach you how to deal with that. And you're going to learn about a new way to think about how emotions shape the way financial markets unfold. So, that being said, let's get into the material here. So in this lesson, we're going to be unwinding a super common belief among traders. If you've been trading for any length of time, you've no doubt heard that people say markets are controlled by fear and greed. That's what causes people to do things and their trading behaviors and everything. It's very widely taught. But what we're going to teach you a spin on that in this lesson. So what are the common beliefs based around fear and greed? Greed makes you take bad trades, right? You have to get in, you have to make that money, and you get in out of greed, but then you realize, oh, it's probably a bad trade. That's one of the common beliefs. Greed makes you stay in too long. You feel like, oh, I got to get a little bit more money out of this trade. I got to stay in, and then it goes against you. That's because of greed, right? That's common belief. Greed makes you over leverage. You know, I got to go all in on this position, and I got to make the most money out of it. And, that greed is a major factor in making you over leverage your account. That's another common belief. Fear makes you scared of missing out. Ever hear the term FOMO? Fear of missing out. You see a move going by and I feel fearful. I'm greedy and I'm fearful. So now I got to jump in. I got to get in on this move before it passes me by, right? So fear is about that, right? Fear makes you scared of losing money. You see the position going against you. Oh no, I'm scared. I'm losing money. You close the position, right? So let's talk about the facts. The facts are, this is true to some extent. Fear and greed do play a part in this, but not in the way that everyone thinks, okay? We're going to get into that further. Facts are, traders want to be productive, not greedy. Maybe people get into trading because they feel like, oh, I can make millions overnight, and all these things they think. But when they get in, you're sitting at the screen. You really just want to be productive. You don't want to sit there and be so disciplined and so scared to trade. You got to get in a trade. You want to make something for the time you're spending to learn and the time you're spending on the trade. So traders want to be productive, not greedy, especially the longer they trade. And facts are, traders get less and less greedy the longer they trade. Have you ever started, or maybe when you started trading, you're like, oh, I just want like 50 pips a day. 50 pips a day, I can get it, right? And maybe you were talked into some strategy that's like, make 50 pips a day easily and every single day. And you got in. You quickly realized that that's probably not realistic, especially if you're trading, London, New York session on lower time frames. Quite hard to do, okay? As you trade longer and longer, you're going to get less and less greedy. You're going to be like, I'd be happy with 25 pips a day. You trade a little longer. You know what? If I'm going to get a strategy that just gives me 10 pips a day. 10 pips a day would be great. Then you're like, after you've gone through different strategies, I'd be happy with 5 pips a day. I'd be happy with 2. Just let me be positive every day. What's such a simple strategy I could do? Just give me 5 pips a day. I got to be able to do that. So traders get less and less greedy is the point I'm trying to make. Okay, facts are there is always a little fear when entering any new business. Trading is a business. The financial markets is a business. There's the unknown. You don't really, especially if you're new, you don't really know how it works. There's always going to be a little fear with that. And that goes for any business that you're getting into. Okay? But the fear should subside over time as you develop confidence to perform actions that bring consistent positive growth. You shouldn't be fearful forever. Once you understand what to do and you get better at doing it, regardless of the business you're in, the fear should subside because it's replaced with confidence. So let's go to the next slide. So what really drives your actions and every other trader's actions is what's called your PNP threshold. Now, what is a PNP threshold? PNP stands for pain and pleasure. Your pain and pleasure threshold is the exact price or the exact point where you switch between these two states of being while you're trading. This threshold is defined by your execution price of a new trade or the break-even average of a series of multiple layered positions. So what does this really have to do with trading, this pain and pleasure threshold that I'm talking about? Well, as humans, remember this, as humans, our programmed response is to keep pleasure going and to end pain immediately. Think about it. If you're doing an activity or something that makes you feel good in your brain, you want it to keep going. No one ever wants good things to end, right? And when something is painful, you want it to end immediately, right? You want it to stop. So how does this translate into trading behavior? Okay, so the next statement I'm going to make, I think most people would not argue with me on this one. Trading successfully requires you take unemotional, decisive action at the right time repeatedly. You have to execute your system, take decisive action according to that system, right? So here's where your pain and pleasure response comes in your trading. The moment your trading positions become profitable, your brain starts producing pleasure chemicals. And why wouldn't it? You see your P&L going up. You see you're in the trade. It feels wonderful. I made a good decision. You know what? I think I really knocked this one out of the park. I think it's going to keep going. You know, you start dreaming of Lamborghinis and private jets and everything else that they push out there and all the dumb trading videos. And you start feeling great. Like you really nailed it. So the problem with this is that pleasure chemicals naturally cause you to become lax and slow because you don't want it to end, right? You're busy enjoying the pleasurable feeling of being right. Now, the other end of it is that the moment your positions become negative, your brain switches to producing emotional pain signals. Okay, you see that your P&L going down, your trade enters a negative space. Okay, maybe this wasn't a good idea. Maybe I didn't look at this right. Oh, I don't like watching that money go down. Okay, you're starting to feel pain, right? Now, these pain signals naturally cause you mental pressure for you to take decisive action and make the pain stop. So you're taking the decisive action that's required for trading, but you're doing it to make the pain stop, just like touching a hot stove. It's too hot. I got to cut it, right? So that pain is really controlling the pressure on your trading behavior. So when trading any financial instrument, the reality is you are constantly fighting an inborn tendency that makes it intuitively easy to be a consistent losing trader. Let me say that one more time. When trading any financial instrument, the reality is you are constantly fighting an inborn tendency, something you were born with, that makes it intuitively, you don't even have to think about it, intuitively easy to be a consistent losing trader. So you will naturally and intuitively take decisive action, that all-important decisive action, at the wrong time while your position's in the negative, or even if you had a positive position, when it starts coming back against you and you're watching your profits be taken away, you're still feeling pain at that point. So that's causing you pressure to take or to make that decision to close that trade. So this takes no learned skill, since it is naturally programmed into every normal human. Make pleasure last, make pain stop. Very simple. Okay, so let's take a look at a real-world example of all this stuff playing out that I'm talking about. So on your charts, you see an uptrend. Okay, you see that we're getting higher highs. Maybe you've used moving averages or trend lines in the past, and you see that we're clearly in an uptrend, right? And better yet, you see a pullback happening right now. So you're like, I got to get in. I'm going to buy right here. I'm going to enter this uptrend that I see. Okay, that's your strike price. From that strike price, you are going to cast forward into future price action your threshold price. Okay, that threshold price now is where your position becomes positive or negative, obviously. Now, the higher you get above that threshold price, you are going to feel increased pleasure, which is going to equal slow or no action on your part. Those pleasure chemicals are going to come in. You're going to feel good. The higher you go, higher price moves in your favor, the better you're going to feel. Now, as price falls below that threshold price, the further it goes, you're going to feel increased pain, which is going to equal faster and more decisive action. So let's watch how price action unfolds through your threshold price. As it goes up, you feel confirmed. I made a good decision. I'm up a few pips. This was good, right? You start watching that price go up. You're feeling good about it. All of a sudden, it drops back. Okay, maybe I need to reevaluate what I did. Now I'm negative. I was in profit. Now what happened here? Did I not look at this right? Now it goes back again in your favor. No, this is it. It was right. Just had another, quick pullback. That was a little bit better price, but now it's really taking off. Okay, I'm good. I made the right decision. Oh man, this isn't what I thought it was. You know what? In fact, that looks like a double top. Maybe it looks like a head and shoulders. Whatever you want to call it. It's going against you. And it not only did it go against you, it's spiked down. You're feeling like this is a bad decision. You know what? In fact, seeing that spike, this is probably a short, and you just jump in at the bottom of that. Yeah. So this could happen, and ultimately it goes your way, and then you chase it long again. Point is, through this sequence, your pain threshold was pushed 2 times, and the second time it was pushed was very severe, causing you to really feel like I need to close this trade and get out and possibly even jump in the wrong way, and then it ultimately went long. Okay, the markets are ranging 90% of the time, okay? Anywhere that you enter in the market, your pain threshold is going to be pushed. Any place you enter, you're going to feel pain. And if you don't understand how the markets actually work and how they unfold, which you'll learn in our master pattern video, you'll learn how to identify this. But point is, your pain threshold is going to be pushed, and you need to understand it's getting pushed, and you need to understand what's actually happening on the chart so that you can avoid not making the wrong decision at the wrong time. Okay, so let's look at another example here. Even in profit, you are pressured into taking smaller wins. Okay, you feel pain as profits are taken away. Even if you correctly enter let's say a long trend, and you see profits and it's really going in your favor, as the market drops back against you, you're going to start to feel pain, right? This makes it hard to book maximum profits and easy to lose or break even on most trades. So let's take a look at this uptrend forming, right? Right here, you see a breakout. It's time to get in. That's your strike price. And it takes off. Wow, I really called this one right. But ultimately, market goes back into a range, even drops back. Okay, now my profits are being taken away. I'm starting to feel pain. You know what? I'm just going to get out. If you got out where the red arrow is pointing, that's almost at your break-even price. So you barely took anything off. You didn't take the max profit you could have took at the tip of that, right? But here goes the market again. Oh, it's breaking out. I buy again. I got the fear of missing out, right? You jump in, and you nail it again, right? But ultimately, oh no. Right? Remember that pleasure as you feel that market going up, you feel like it's just going to keep running. It's going to keep running. But markets don't do that 90% of the time. Here comes your pain, right? So you may close this one at a break even or a loss. You're not booking big profits. Okay? Breakout again. Okay, this is really it. Here it goes. Oh man, this is the one. This is the one that's finally going to go. I see the daily rotating. I see the weekly. I see the monthly. This thing's going to go 500 pips. No, markets don't work that way. You're going to feel pain. And here it comes to take you out at break even, or not with the profit you could have taken, right? Again, buy here, same old story, knocked it out of the park, take it back. This makes it very hard to book the profits even when you're right during the course of that trade. So the next trade you take, think about if you are experiencing pain or pleasure. Start monitoring yourself while you're trading for these emotions. What actions are those emotions pushing you to take? Start thinking about it while you trade. This can be a very powerful indicator. It could be extremely insightful into the decisions that you're making while you're trying to trade. So, have you ever heard of the 90-90-90 rule? This is very popular among the broker scene. What it means is that 90% of traders will lose 90% of their account within 90 days. Okay? Brokers know this. It's an industry-wide statistic. Okay? Why is that? Think about it. So because of the nature of how markets really work, 90% of the trades you take at any given price point will take you out of the money at some point during the life of that trade. This will no doubtedly cause you natural pressure to want to stop the pain and cause you to take decisive action at the wrong time. You're going to be pressured to take that decisive action to stop the pain of that loss. Now, the severity of this pressure is completely dependent on your trade size, your trade placement, and your trade timing. So let's explore that statement just a little bit further. The severity of this pressure is completely dependent on your trade size, trade placement, and your trade timing. Now, the size, if you are over leveraged, you're trading way too much money at a consolidated point, it's not going to take very much push on that pain threshold, that negative, to make you want to dump that trade. Okay, this is why people blow up on high leveraged accounts all the time. Okay, your trade placement, if you're trading at the top of breakouts or the bottom of breakouts, very high chance you're going to get into some pain. It's going to come back against you. Your pain threshold is going to be pushed. Timing. If you see the market has taken off and it's ran 200 pips in a huge trend, and then you see a little pullback at the very top of that trend or the very bottom of that trend, you get in. Markets are going to go back. They're going to go back into the what we call the contraction phase. You'll learn about that in the next video. But you're going to get that pain threshold push. So these three things, understanding these and being able to manage your trade size, your trade placement, your trade timing correctly is going to have a huge effect on the amount of pain you have to go through, because we all have to do it. We all have to feel some pain while trading. It's how you manage it. So think about this real quick. Why do people do so well with demo accounts and then they lose when they switch to live money? Right? I'm sure you've experienced this at some point where you had a demo account. You're like, man, this trading's easy. Man, I'm just putting in trades and I'm closing profits left and right. You know why? Because there's no pain. There's no pain. You just wait for you have, unlimited amount of demo funds to play with. You can watch trades go negative. There's no risk to you. And as soon as it comes in the profit, like, oh, I guess I'll close it. You're missing pain from the equation. So then people think, oh, I'm going to switch to live money. Guess what? Now there's something on the line. Here comes pain, and they have no idea how to deal with it because they've been messing around on a demo account. So other factors that are going to increase your pain and pleasure response sensitivity are undercapitalization combined with desperation, okay? If you need money right now and you need to pay your bills and you need to make a steady paycheck, trading is not the place to go try to do that, okay? You're going to be undercapitalized. You're going to be desperate, which is going to cause you to make dumb decisions and you're going to be highly susceptible to pain. If you release too much leverage at a consolidated price level, this is going to greatly increase your likelihood of closing trades when you're in pain, even if it's still a good trade, even when you're right. If you're loaded up on leverage, one position, all in, it's going to take barely anything to probably margin you out. And then you can't even play anymore. Or if you're just trading too heavy, your pain response is going to get pushed. All right? So CFD brokerages with 100 to 1, 200 to 1, or 500 to 1 leverage are built on this as a business model. They understand this is what's going to happen. Give dumb money traders access to 500 to 1 leverage, push them to a short-term binary strategy, then let them trade in a market that will push their pain response 90% of the time. Is an absolute recipe for disaster. And that's why CFD brokers take most of these trades in-house. It's a guaranteed 90% win rate. The more deposits they get, the more money they make. So in brief review, all traders are subject to their own pain and pleasure threshold. I don't care if it's the best trader in the whole world. Every single person that trades in the financial markets and holds a position that they are hoping to be profitable has a point where they will say, this is not a good trade anymore. Okay, even value investors who are just buying for the long run in a company or holding stock have a point where that stock, if it tanks, they will get out. I guarantee you it will happen. So, their time frames are just much longer. But everyone who trades has a breaking point and a pain threshold. You will never get rid of it or completely numb your response. You will never be so unemotional in your trading that you will completely get rid of this. It's not going to happen. So the question is, how do you work with it for profit? How do we take this information that we know every single trader is going to go through? And how do we work with that? How do we work with our own pain and pleasure response and understand ourselves and apply that to the market so that we can be successful? Most traders are going to try to rely on pattern recognition and systemized rules to distance themselves emotionally from the market. They know, they think that if I can just get my system where it's like, it comes over this moving average and then it pulls back to this price level and then I can set my stop at this precise place and then I have my take profit at this precise level and that works in this market. They try to come up with this systemized, rigid set of rules so that they don't have to feel about their trade anymore. And they don't understand, probably to the extent that I'm explaining this to you, that they're dealing with their pain and pleasure response. They still think it's fear and greed and all that other stuff. So their systemized process is trying to remove that. This is their attempt to battle what's really going on here. And this is not going to work because traditional strategies ignore the fundamental fact that trading is a game between people. To win at trading, you have to take money from another trader's account. Someone wins, someone loses. This requires the person you're trading against to make the wrong decision and for you to make the right decision. Therefore, the key ingredient in any successful trading strategy is being consistent at recognizing when masses of traders have made a mistake. Being consistent at recognizing when masses of traders have made a mistake is the key ingredient in a successful trading strategy. You need to wait for them to be pushed into pain. You need to identify where they're going to be pushed into pain. Then you need to use their liquidity from their pain of where they're getting out to enter and exit the market at the right places. By understanding where people are getting in and getting out based on their pain and pleasure zones, that's where you take action. That's the key. Think about this for a second. If you were trading big enough positions where you actually had to worry about getting filled, what would you have to do? Think about it. Get your head out of your retail trading account and start trading billions, trillions, where you actually have to think about timing of filling those positions and then getting out of those positions. Your entire strategy would have to be based on other traders being wrong. That's all you would think about. You're not trading against lines. You're not trading against how good can I navigate a moving average? How great can I read an oscillator? It has nothing to do with anything. All you're worried about is getting filled. So you have to wait till traders are massively wrong. They dump tons of liquidity in the market at the wrong place so you can fill your billion-dollar positions. And then you have to wait for that to go against them, a new trend to form, them to re-enter the new trend after taking a loss, and then you scale out of your position. It's the only way it would work. So, and that's just talking from a market maker's standpoint, trading these huge accounts. That's the way the markets are going to move, based on 90% of the traders losing and only a few winning. It's how they have to work. So real quick, just to expand on what I'm talking about, on how you would need to think if you're a big player in the Forex market, there's this awesome article here on Investopedia.com, and it's about the foreign exchange interbank market. If you scroll down, right here it's talking about who makes the prices. But right here on this paragraph, just want to read this to you real quick. Most of the total Forex volume is transacted through about 10 banks. Okay, these banks are the brand names that we all know well, including Deutsche Bank, UBS, Citigroup, and HSBC, which are just to name a few. Each bank is structured differently, but most banks will have a separate group known as the Foreign Exchange Sales and Trading Department. Government banks have some of their own centralized systems for Forex trading, but also use the world's largest institutional banks as well. That tells you even government trading is flowing through these elite banks. So the elite group of institutional investment banks is primarily responsible for making prices for the bank's interbank and institutional clients, so helping out their institutional clients, and for offsetting that risk with other clients on the opposite side of the trade. So where's that risk getting offset to? Point is, 10 banks control over half the volume of Forex. They talk, they understand how the game is played. So you're talking about billions and billions and billions of dollars being moved all the time. It's not about your tiny position, comparatively, that you're trading as a retail trader. This is what controls the flow of those markets and what these banks decide to do. It's not going to be the little tiny retail traders moving the market around. Let's get back to the lesson. So now I'm going to introduce you to the cure from all this madness I just told you. This is the Forex master pattern, the 3 market phases. It's getting to be a popular concept, okay? People have different spins on it. We have our own spin based on pain and pleasure and what that means for this type of pattern. So this master pattern is the physical charted manifestation of the mass market's pain and pleasure driven behavior. These 3 phases are how these pain and pleasures, how you can read them unfolding on the actual chart. This is the only pattern that matters in all financial markets. This is it, because it directly addresses how money is being transferred based on how traders trade of all skill levels. Understanding this pattern is the key to entering the market with the least severity put on your pain threshold and max winning probability in your favor. If we all want to avoid pain from our entry price, all of us do, regardless of our skill level, we don't want our pain threshold pushed. Understanding this pattern shows you the entry points that have the least probability of putting you in a lot of pain. That is information you want to know. And this is the only way to interact with the market to make winning a calculated, repeatable process. In our opinion here at Trade ATS, taking the time to learn this pattern and study this methodology of how pain and pleasure affect market cycles is the absolute best platform that you can choose to build your skill set on, whether you use our software or not. This is it. If you're going to take the time to learn trading, you're going to get up every morning, trade London, New York sessions, however you're going to approach it, spend the time to learn this, and you're going to be doing yourself a massive favor and save yourself a lot of pain and heartache along the way. So learning how to follow this pattern in trend is the best way to consistency in Forex trading. You're going to learn that throughout the rest of our course. How do I identify what's happening on a longer term time frame? Takes the guesswork out of which direction to trade, and then you learn how to basically sniper target shoot your entries based on how these pain and pleasure cycles are unfolding in the master pattern, and put yourself at optimal price points into an existing trend. It doesn't get better than that methodology. Now, disclaimer, all this that I've been teaching you still does not make trading easy. It takes skill and time to develop the feel of how these cycles unfold while you're still dealing with your own PNP response. But learning how to identify these cycles within an existing trend is the quickest way to start doing good for your trading account and actually making progress. So what you should have learned throughout this lesson is in every trade you take, you are subject to your pain and pleasure threshold. By being observant of the effect these natural responses have on your trading, you can be aware of the decisions you are being pushed to make. So the more you get familiar with your responses and the more you study the master pattern, which you'll learn in the next lesson, you're going to have a deep insight into what's really driving the current market that you're looking at. This will help you to be mindful of whether entering at a given price point is a good decision or not. Once you start seeing how you feel when you take trades, when you see a spike, you're not going to feel so hot about jumping in on those breakouts anymore, because you're really going to understand what the chances are of what jumping in there is going to do to you. So the key ingredient to a successful trading strategy is understanding the price levels where the masses of traders' pain and pleasure threshold is being pushed on. Where are they in pleasure? Where are they in pain? That's where the liquidity is. That's where the big players are going to get in and out because they need to. They don't have a choice. The master pattern is the key to accurately mapping out the precise reaction points where the masses will be pushed from pleasure to pain as a whole. We don't have access as retail traders to the real data that market makers have. They can see your stop levels. They can see your limit levels. There's no guesswork. You're just telling them where you're going to get out with your stop. We don't have access to that. The best thing that we have is understanding the master pattern and either mapping it out on just a regular candlestick chart, or our software, our ATS software is designed to do that for you. It's all based on mapping out pain and pleasure and the three market phases and how that's gonna unfold. And then when you have that information, you form your trading ideas based around that as hard price levels to deal with. Looking at the markets from this perspective is the real edge in trading and the foundation you need to build your skill set on for sustainable success in all market conditions. So if you learned anything from this video, study the master pattern video, think about your own pain and pleasure response. More importantly, think about everyone else who's trading that doesn't understand this. Think about their pain and pleasure response, what that's going to cause them to do to get in and out of trades. Then you'll start seeing the real market. So at this point, I'm going to ask you to please watch the master pattern video to understand how to use this pattern as a foundation for all your trading decisions. That's the next level of your training on your way to learning how trading in the market really works. So thank you for watching this video. We'll see you on the next one.